And we're the annuity guys.
And Eric, the number one question we get invariably is,
what's the best annuity?
What is it, Eric?
Well, I'm not telling.
You're supposed to know the answer.
Well, then I need a little bit more information, you know?
Isn't that the truth, though?
Yeah, and obviously, you're at the site. People here watching this video are interested in annuities.
Right.
They want to know,
right,
you know, how can they grow their money safely, probably.
Yes.
Maybe they want income for life. Maybe
they just think that annuities make a lot of money, and why not put your money in there? You know? I mean, there's a lot of misconceptions.
Right, and there's a lot of reasons people are here wanting to know what's the best annuity.
Well, and the first thing that you have to determine is just...
Is an annuity right for you?
Is an annuity right?
Yeah.
Because factually, Eric, we talk to a lot of folks, and there's a lot of you out there that should not buy an annuity. There's a lot of reasons for that.
Well, and it's usually unrealistic expectations. You know, if you're buying something that you want to compare to a securities product, an annuity is not a securities product.
That's right. That's right.
And so if the expectation is it's going to perform like a mutual fund or like a stock.
It's got this unlimited upside. And we do have to, we have a caveat here. There is a variable annuity.
Yes.
That does have an unlimited upside and an unlimited downside. And we have to talk about that.
Okay. we should point out the differences between when we're looking for the best annuity.
Yes.
If someone's considering a variable annuity, they have to realize that their principal is at least at risk. You're going to fluctuate both up and down with
earnings, principal, your account value is at risk. And that's the fundamental difference, Eric. And we have to, this is the core understanding of annuities. Folks, if you get this, if you don't get anything else, get this, because this is what you build on for the rest of your research and information. There's really two main categories of annuities. The fixed annuity, the company absolutely guarantees the principal, and all accumulation that's locked in at some point becomes the principal. So that's guaranteed, and that's a fixed annuity. There's so many variations of the fixed annuity. We're going to talk about those a little bit here. But the other category that you have to understand is the variable annuity, and it's just the opposite. That's where you are willing to take the risk of the principal and the earnings, that you could actually lose your money, or you could lose a portion of your money, but you also have what we call unlimited upside. And even though we say unlimited, because it has that potential, there are realistic expectations too.
Yeah, and usually when you're buying a variable annuity, you're usually looking at sometimes the riders or the investment choices or the options to get tax deferral. That's why you're looking at those choices. Now, we're very upfront typically. For us, variable annuities fit a certain classification of individual, usually a little bit younger, wants that upside potential, has time to take some of that risk. Now, as you get closer to retirement, don't like the downside risk so much. Now, you can utilize the income rider aspects of a variable annuity perhaps to get guaranteed income.
And one of the negatives that variable annuities get hit with a lot, and there is fact in it, fees. Right. And they tend to run, I mean, on the low side of variable annuities, a couple percent.
Well, as I say, on the very lowest side, you can pick them up at, just under 1%.
Like a no load.
But they're a stripped down Vanguard type Fidelity type of VA. That's going to be your low base. But most of them.
Yes, the vast majority.
I was going to say, most people, when you buy a variable annuity, usually you're sold the sizzle part, which is the guaranteed roll up of 5% or 6% a year, and that's going to be going.
And we've seen fees on that up in the 4 or 5% range. So if you're overcoming 4 or 5% in fees every year on your account value, you have to have a pretty good return to come out positive.
And that's what we always say. Look at the sizzle. You realize when someone says that the guarantee
you're paying for it.
There's a cost to it. Exactly.
Yes. And on the flip side, when we go to the fixed annuity, they have some sizzle.
Oh yeah, you have to usually.
They have some guarantees.
They usually have and this is where we start talking about hybrids and the fixed index aspect. You'll get some guaranteed growth components there along that same kind of 5, 6, 7% in today's economy, in today's annuity world. That have those same types of options, but usually there's a fee associated with most of those.
Right. The fees tend to run quite a bit lower than the variable annuity versions.
And you're also giving up some of the upside potential
on the cash account.
Right.
So So if we, again, just for emphasis here,
Yes.
just re-summarize that the variable annuity is where the client or the policyholder takes the risk, and the fixed annuity is where the annuity company takes the risk.
Yeah.
Get those two categories down. Now, Eric, let's just talk about the other annuities in general.
Okay. Immediate annuities are probably the one that are most commonly thought of when people think of annuities, because it's the one where you walk in and you have your savings, you give it to the insurance company.
A lump sum.
Lump sum, and they set you off basically on a salary or a distribution
Right.
for either your life or a defined period. And it just breaks it down, and you have that coming in as
You know what you can rely on. It's like clockwork. If we stereotype just a little bit, the immediate annuity tends to give the highest payout
Yes.
when you're starting the income immediately. If you're going to defer it a little bit, they can run neck and neck, even lose ground to some of the deferred annuities,
Right.
with the guarantees that get the income up higher as later years come
right.
along.
And with an immediate annuity, typically you're starting income within you are starting income within the next 12 months. So that's where that category comes in. Now, we like to kind of think of that as kind of it's kind of a pension style plan.
It is.
Now, you can use multiple types of annuities, but that's one where you're starting right away, usually taking that lump sum.
It's as close to a true pension as you can get, because you really are. You're giving up your lump sum.
Right.
It could be an IRA. It could be just a savings account. But you're putting that all, allocating that all to an annuity for an income stream.
Right. And when you're gone, or you and your spouse are gone, it's done.
Yes.
It's typically
Yes.
over unless there's another guarantee.
And unless you
associated.
buy one of the additional riders or incorporate that into the
Period
immediate
certain.
annuity. Yes,
Yeah.
yes, yes.
So-
Now, one thing that's become very popular that ties into similarities to the immediate annuity is the hybrid annuity,
Yes.
which is a fixed indexed annuity. So we'll kill two birds with one
Right.
stone.
So
here.
it's a fixed indexed annuity with an income rider.
Yes.
So you still get the income for life aspect of the immediate annuity, but you also have some other sizzle usually there for deferred growth, some other pieces that go with it.
And the real hybrid aspect of it is that you do not have to give up your
Lump sum,
your
yeah.
lump sum, your
Yeah.
principal. And this is what people love about it, because it can get very close to the payout of an immediate annuity. It can guarantee it for life, but leaves you in majority control of the money that you have accumulated over many years, so that if something comes up,
So you don't have to annuitize. That's the word, annuitize.
right.
Is where you give your basically your lump sum to the
and,
company.
and we've heard that many times as
Annuicide, yeah.
Don't commit annuicide.
So we're not saying that that's necessarily a bad thing. You might be a little bit lower than the immediate annuity, but very comparable. But again, you retain that majority control. So.
Yes, and let me explain what we mean by majority control. Majority control, folks, is so annuities have surrender charges. Typically, they'll run 7 to 12 years, 14, 15 years sometimes. And every year, that penalty or that surrender charge decreases.
Typically,
and
yeah.
so you will have a majority control in the beginning of somewhere around 90% typically of what you put into an annuity. But that 90% will become 95% and 98% until you have 100% control, but you still have all the contractual guarantees of the annuity for the rest of your life throughout retirement.
Yeah, so that's the hybrid annuity has become probably one of the most popular versions that we see people, especially when they're calling and asking us.
Yes.
And so that's become, when we get this question, what's the best annuity? Usually it's gotten a little hyphen anymore. What's the best hybrid annuity?
Best type of annuity for what they're trying
Right.
to accomplish, and many times it is that category.
And many times it's not just one category, but it's a combination of the categories. You may start out with an immediate annuity and then add on a hybrid style or something with an income rider that basically gives you a guaranteed jump at another stage in life.
Well, and this is where we have the advanced concepts of laddering annuities. We have what we refer to as separate rungs of the ladder, or separate buckets that are for certain parts of your retirement life cycle. Your immediate portion of retirement, your first few years, you may need a little extra income You want to prepare for inflation that we believe may be coming 10 years, 15 years, 5 years down the line. You may have some reduced income needs at some point in retirement, and all of these have to be factored in.
Right.
And those annuities staged in the proper way. One thing I'm leaving out: many folks want a return of their principal. They want to get back to where they started.
So can annuities do that? Can we use a bucket or a rung that basically regrows the principal so that there's something that's passed on the heirs, basically the equivalent of what you started with?
Not only, Eric, can it be done, it can be done tax-free, which is a pretty exciting thing when you get into the
You're
advanced
giving away
planning.
all the top secrets now. They won't even have to call or ask any questions. So I guess when someone calls up and says, Dick, what's the best annuity? What's your answer for them?
It's always the same, Eric, and we wear it out, but it depends. It depends. Are they just looking for beating a CD rate? Well, that's a completely different type of annuity. That's just a fixed annuity.
Right.
It might have a multi-year guarantee. Do they need the highest possible income starting today or next week? That's an immediate annuity. Do they want to keep control of their money and yet have ability to know that their money will last throughout their lifetime? That's maybe a hybrid annuity. Are they interested in growth and being able to move money around in sub-accounts and different investments without having to pay capital gains? That's a variable annuity, maybe a no-load. So this is where it takes the right planner.
It takes the right planner, and you have to know what you want. You have to know your income numbers. You have to know your expectations.
Your own objectives, your own goals.
Yeah. We will never hit a target we can't see. And if you can't put the target out there, I guarantee you can't hit it. So when you're looking at annuities as an option, you have to know where we need to get to.
And folks, we have so much more on in-depth knowledge on each one of these annuities. We have a video series that you can look at. We have many different topics on these individual annuities and these advanced strategies.
So it will definitely help you figure out which is the best annuity.